In this video, you're going to learn when the majority of businesses actually expect inflationary pressures to go away. How long is it going to take? Is it going to be a few months? Is it going to be a few years? Or somewhere in between? Let's get into it. Right after I mention that if you want insurance, go to metkevin.com/lemonade. You could get life insurance, homeowners insurance, pet insurance, or even renter's insurance. It's super easy to do. Go to metkevin.com/lemonade. That's metkevin.com/lemonade to sign up or at least quote insurance. It goes really, really fast. You can do it from your phone. You can do it from your computer. Again, metkevin.com/lemonade. Hey everyone, me Kevin here. In this video, we're gonna do a bit of a deep dive on what the Fed is tracking in regards to inflation. Now, this gets a little granular, but it's really good to see because you wanna see changes in specifically what they're tracking. It's really useful since a lot of things move when it comes to the Fed. People always wonder, Kevin, where do you come up with these big plans of why you say September to October and why you do options at a certain point of this? A lot of it has to do with just a funnel of all of the things and research that we do, basically all pointing in the same direction. So let's get into this and just do some bottom lines here. So really what I want to spend time looking at here are the impacts of supply chain disruptions. I know, for example, demand is going to go up at restaurants and hotels and entertainment, things like that. But I'm also looking at supply chains. Supply chains and inflation or price impacts. Those are important things. So let's take a peek here. For example, when we see nationally that contacts in several districts say that supply chain disruptions pushed costs higher, and in some cases delayed projects, that's really important because it's a signal to us that in the future, we could see earnings reports actually come in worse than expected, not just because maybe margins at companies fell, but also because bigger sales or bigger upgrades or bigger projects just got outright delayed. A delayed big sale or big project at a company doesn't show up in margin, but it shows up generally in lower revenue. And so this is a way of potentially exploring, okay, so maybe that's why revenue missed at a certain company because they had trouble finding workers or whatever. This all helps us a lot. Let's go ahead and get to some of the big conclusions though here. This is the overall summary, and what I prefer to do is just go district by district. So let's go ahead and start in Boston and see what we have over here. So in the Boston area, we've got, and this is the Boston Bank, so 12 banks throughout. We've got higher labor demand, wage increases were slight to moderate. A big concern is that inflation is definitely coming because wages must go up if it's hard to find workers, right? Well, we got slight to moderate in Boston for manufacturers. Restaurant wages also went up. They didn't say moderate, though, just said went up. And selected hourly workers enjoyed wage increases of up to, whoa, look at that, 30%, with signing bonuses and enhanced recruitment efforts mentioned with increased frequency. That, as well as some other benefits like childcare benefits. It's a big roadblock right now to getting people back to work, childcare. 30% increase in wages in some areas. That is potentially inflationary, right? And wages can be sticky. They can be here to stay. High demand, low inventory in auto led to modest increases. Again, we're just going for the highlights and the bottom lines here. Staffing issues. This is still Boston here. Some contacts perceived that generous unemployment benefits were the deciding factor in holding back labor supply, but others expected at least a modest boost in labor supply as vaccination rates climbed and infection rates declined. This makes sense. As less people are getting sick, we feel more comfortable about going out into the environment. Going out back to normalcy. That sounds so like bubble-ish, like, oh, going back in the environment. Just going back to normal, right? Take a look at the New York sector, though. An overwhelming majority of contacts in construction and manufacturing noted price increases, and businesses in all sectors expect widespread hikes in prices they pay in the months ahead. Ooh, ouch, ouch, ouch. That's, that's certainly inflationary, right? What we're really looking for, because we know there's inflation, what we're really looking for is when are we going to start seeing changes? When are we going to start seeing this inflect downwards? And that's what's important, where we start seeing companies saying, hey, we got these big price increases, but we expect them to go down. For example, here, uncertainty about future inflation was also cited as a concern in planning and formulating contracts. It's a problem. All right, let's get on over to Philadelphia. Contacts continue to note severe supply chain disruptions impacting most sectors. Microchip shortages continue to limit current and future production plans, and container shortages continue to disrupt logistics. And remember, this is information that's put together for the May period. So this is right around May 25th is what they collected this for. So we're pretty close here. This report was prepared for information collected on or before May 25th. Yeah, exactly. All right, so that's Philadelphia. Let's get on into Cleveland for prices. Rising input costs were partly attributed to supply chain challenges caused by suppliers who did not have enough workers to meet demand. That's interesting. So now we have in Cleveland a blaming of not just cost increases on rising input costs like resins, metals, lumber, packaging, freight services, but also on the fact that, hey, if we don't have enough workers, we just have to raise prices because we can't hit all the demand. Makes a lot of sense. One real estate developer said that quotes from general contractors were now valid for only 10 days, whereas before the pandemic, quotes were valid for 30 days. Wow, because of materials. That's something else. Contacts now expected to take longer than previously anticipated for these supply chain issues to be resolved. See, these right here, these are the kind of things that we want to be paying attention to. When firms believe that inflation and supply chain issues are going to last longer, we basically enter a more potential problematic scenario. Several contacts believe there was a good deal of pent-up demand that was being released as government restrictions were being eased. Now, in the Richmond district, take a look at this. We get an interesting note here. First of all, several employees also noted that rising wages for entry-level positions led them to raise wages to retain more experienced staff. So if you raise wages for lower, obviously you got to raise everyone else's, right? Those things are important. But take a look at this. We got prices going up for goods and service producers, but check this out. A furniture store said that they were unable to pass along increased costs because of online competition and the MSRP pricing. In contrast, a small appliance manufacturer was able to pass along price increases because others in the industry faced similar rising input costs and were also raising prices. So that's really interesting. So in certain sectors, it's almost impossible to raise prices because there's just too much competition online. But in others, where everybody is increasing or jacking up their pricing, like I would imagine used cars or like this example, small appliances, well, in that case, all right, easy peasy, raise those prices. So kind of a real interesting tug and pull that we're getting in markets here. Let's see what else we have here. Retail. Many retailers reported that supply chain disruptions such as shipping and production delays were limiting inventories. We know that. This is in Richmond. Demand exceeded supply. Atlanta. Several contacts anticipate that labor shortages will abate this fall, but there is a great deal of uncertainty about how much supply will materialize. Supply of people or stuff? Hold on, let's read this in context here. No, this is all in employment. So so in other words, they're saying they think they're going to get more workers, but they're not sure exactly if they're going to get enough workers. So you might still have that wage price pressure in the future. Opportunities to offer remote work for some positions have removed geographic barriers, allowing employers broader access for talent, right? Wage pressure picked up in April through mid-May. What else? Prices here. Input costs went up. This is pretty much the same. No surprise here in Atlanta. Relatively the same in Atlanta. The focus here was really on pricing and inflation in terms of what we highlighted and really finding things that are different, commentary that's different. Now, here's an interesting one. In Chicago, we hear that many manufacturers said that, unlike usual, they were able to raise prices with little pushback as people anticipated higher prices. That's interesting. All right, then we have consumer prices moved up moderately due to largely increased costs. In response, there were reports of some retailers limiting operating hours or trying to cut costs by renegotiating leases. You know, I've actually seen this with like 24-hour fitness, for example. It's not 24 hours anymore. Like out here, it just like, they just close at 9 p.m. And I'm like, really? Come on. It's not 24-hour fitness anymore. Anyway, then supply chain issues had worsened. Here we go. They expected little improvement through the end of the year. Ooh, so really here, they're expecting this supply chain issue to really last in Chicago through the end of the year. So really getting a mixed picture in terms of when that supply chain issue is really going to clean up dramatically. Now in the St. Louis district, a similar argument regarding prices going up, especially autos, but take a look at this. These contacts attribute the price increases to high demand and reduced supply due to input shortages. However, these prices are expected to stabilize before the end of the year. So it's really the end period, that last half of 2021 and the beginning of 2022, that's gonna be our real tell for pricing and what kind of activity we have. Like if I were going to draw the chart, I would really say, okay, so here we go. This right here is Q1 through, let's go Q4 of 2021. This is the 2021 half. This is 2022 over here. I would say our inflation adjustment period is really this section here, where finally we start seeing through the end of Q2, 2022, and starting in Q3 21, in this range right here, we really start seeing inflation pressures start moderating. In Minneapolis, contacts also talked about being able to pass markups along to customers, something else we want to pay attention to. In Kansas City on pricing, we saw that about 80% of contacts expected these factors to persist for 12 months or less. 80% think the pressures are going to last less than 12 months. That's pretty big. So here we go. When do we think inflation is going to end? Folks, the inflationary pressures, everybody seems to be agreeing that they'll probably be gone or faded by mid-2022. 12 months or less, 80%. I guess I shouldn't say everybody, it's 80%. Okay, so that's Kansas. Let's get into the Dallas sector for prices. Price pressures intensified, input costs surged. There were several reports of higher prices for fuel and other input costs. We want expectations though. Compared with the year-end 2020, business contacts have revised upward their expectations for input and selling price increases in 2021. So in Texas, expecting to increase prices through 2021 as well. San Francisco, no real outlook other than, prices are going up for grocers and restaurants, and it kind of sucks right now. Also, there's a note that the drought is certainly not helping in California. This is for the San Francisco board. Residential construction activity has continued to expand at a brisk pace, although construction still failed to meet high demand. In other words, still a massive lack of building in California. That's not a surprise, though. That's why I'm running for governor in California, to try to actually solve the massive imbalances that we do have in California. But there you have it. I have to say, let's do a little summary there. We've got a pretty good time frame here. It seems like most of the Fed districts are expecting, hey, look, if we can hold firm and we can get through certainly the next 3 to 6 months when we start to see maybe inflation curve down, but certainly the next 12 months, then we should expect to see inflation kind of vanish again. That's at least according to the Federal Reserve's Beige Book. I'm inclined to believe this, that it's not going to be quick, and I want to be very clear when I say September, October for inflation expectations going down. I'm not saying all of a sudden we're high inflation and then we're at zero. No, I'm saying inflation's doing this, and then it's like, we're starting to trend down, like still high, but trending down, right? The reason that matters though is the stock market cares about changes in trends. When the trend line changes, that's when the stock market starts pricing in the change and the expectations. And if those trend lines change again, those are the inflection points that you want to pay attention to. Anyway, that's a breakdown of the Beige Book for you. Thank you so very much for watching, and folks, we'll see you in the next one.